Hi all, this is Dr.D.Kiruthika. Today I am going to continue with your Corporate Tax 2 series regarding your collection of tax at source at ETDS returns. So these are all the very two interesting topics we are going to discuss today. One is your collection of tax at source. So you can understand that the TCS is nothing but, in short, we say that as your collection of tax, which is a mechanism under the Income Tax Act of India, where the certain sellers are required to collect the tax from buyers at the point of sale of specified goods and services. So this tax is collected at the source of income and is a way for the government to collect tax revenue in advance. So to collect the taxes in advance as well as to get the money easily from their source itself, we are going in for the collection of tax at the source. What are the key features? It is applicability is TCS applies to specific goods such as your alcohol, tobacco, scrap, minerals and some other specified services. It is applicable to both individuals and companies who are engaged in the sale of these specified items. And then the rates, the TCS vary depending on the type of the goods or services. For example, TCS on the sale of alcohol is generally higher compared to the scrap. The government periodically reviews and updates these rates. And the mechanism, that is collection mechanism regarding your TCS, the seller must collect the TCS at the time of the sale and indicate the amount in the invoice itself. The seller is responsible for the depositing the collected TCS with the government. So here totally the responsibility is falling on the seller, and then the deposit of TCS is the TCS must be deposited to the government account within a specified time frame, that is usually by the 7th of the month following the collection. These all the there will be some penalties for the late payment also. So we can understand that we easily collect the taxes. And then TCS return is done periodically. Usually quarterly is preferred. And it includes details of the TCS collected along with PAN details of the buyers if it is applicable. And then TCS certificate. After filing the return, the seller must issue a TCS certificate to the buyer, which can be used for the tax credit while filing income tax returns. And then relevance for the buyers, that is the buyers can claim the credit for the TCS paid against their tax liability when filing their income tax returns. It's crucial for the buyers to retain the TCS certificate for their records. Okay, right. Then next, regarding your penalties and compliance, non-compliance with the TCS provisions can result in the penalties and the interest charges as discussed earlier. And it is important for the sellers to keep accurate records and ensure timely payments and filing also. And then regarding your recent changes and updates regarding your TCS, tax regulations can change frequently, but it is essential to stay updated with the latest notifications regarding your income tax department regarding the applicable goods, services and compliance requirements. TCS is an essential mechanism to collect the taxes and ensures that the government receives revenue at the point of the sale. So this is purely the initiative from the sellers. And then next one we are going to discuss regarding your electronic tax deducted at your source, that is your ETDS. ETDS returns are essential for the taxpayers in India, particularly who deduct tax at source on behalf of the government. So we have an overview of what is ETDS. It refers to the electronic submission of TDS returns which are filed quarterly by the deductors. This process was introduced to simplify tax filing and to improve the transparency. And who needs to do the filing ETDS returns are employers who deduct TDS on salaries, financial institutions that deduct TDS on interest payments, and then contractors, subcontractors who deduct TDS on payments, and others, that is any entity or individual deducting the tax at your source. Then TDS deductions, TDS is applicable on various payments including salaries and then interest on securities, rent, professional fees, etc. Then filing process, deduction of TDS at the time of making the payments, the deductor withholds a specified percentage of your tax and deposits the deducted amount needs to be deposited with the government. Then next step is preparation of your ETDS returns. This includes all the details regarding your TDS, deductions and deposited. And finally filing of your returns. The returns are filed online using the TDS returns forms. Typically form number is 24Q for salaries and 26Q for non-salaries. I repeat, typically the form number 24Q is for your salaries and then 26Q is for your non-salaries, and I have given some more also. 27Q is for payments to the non-residents and 27EQ is for TCS, that is tax collection at your source. So the completed return is submitted to the e-filing portal of the income tax department. Then important dates for this is ETDS are filed quarterly and each quarter has specific due dates. TDS payments is done. It must be paid to the government within 7 days at the end of the month in which the deduction was made. Then penalties is also given for the non-compliance, failure of the ETDS returns. For this, the last filing fees under section 23(4)(e) is done. Interest on late payments is done under the section 201 subsection 1A. And then consequences for your incorrect or misleading information. We have to check the status. Once filed, the status of ETDS returns can be checked on the income tax department portal, ensuring that the filing and payment were successful. So ETDS is crucial for compliance with the Indian tax laws, and proper understanding the process helps avoiding your penalties and smooth running of your financial operations. Thank you.